Hello, everyone. This is Jessica Hong. A very good afternoon to all of you here.
Recording in progress.
Okay, the recording has started. Once again, a very warm welcome to all of you here. And together with Laksha, we extend a very good afternoon to all of you here. Thank you for joining our class on time, and we're going to begin class now. So I hope you have downloaded these lecture notes, and thank you so much for reading the announcement that we have posted in the last few days. All right. So today we're going to cover part D. So you will remember from the last webinar, you joined me last week. We have actually omitted part D. So we have saved the part D for today's class. And this part D today will cover some of those essential contents, which is also help us to further analyze some of the topics in the following week. So yes, you can say that this is a part D continuous topic to the following webinar. All right. So we are going to start part D by covering some of the essential parts. And these are the three essential parts that we want to cover today. We're going to show you the audit process, which begin with audit planning. And during this part on audit planning, we will also discuss a little bit about the materiality that we usually set during audit planning. And then after that, we will discuss a little bit on the risk of material misstatement. So over here, this is also one of the biggest section that's tested in the ASR exam on risk assessment. So risk assessment is also something that's continuous and is progressive throughout the audit processes that later we will show you how it's being applied. So together with risk assessment, we will also be testing you in some of those areas by doing a class exercise today. So Laksha have just posted in the Zoom chat the lecture notes for today. Thank you so much, Laksha. And then after that, we will continue with audit evidence. In audit evidence, we will also bundle together with this area we call audit procedures. All right. Yes, in ASR exam, it's quite common for us to actually, yes, they ask you for audit procedures. The question is very much tailored towards like how are you going to respond, to some of these high audit risks that is identified in the case study. So the questions are commonly tested on this, but together with the audit procedures, they usually also will select a particular SFRS for them to test on. All right. So next week, when you join me in our next week's webinar, we will actually learn how to evaluate some of these case studies using some of these FRS. And we will also look at how we should prescribe and what sort of appropriate audit procedures should be prescribed to in response to the audit risk that identified in the case study. All right, we'll take a look at that. So this is the area that we will cover, all right, for today's class. So let's one more time go through some of the details on each activity that we have identified for today's class. For planning and maturity, I will begin by showing you the audit process for the whole audit process. So I called it the roadmap. All right, we will talk about that. This roadmap is important because it actually shows us what are the areas of focus that we need to look at during our planning and also audit testing. All right. So in this roadmap, we will also use this as a introduction to position how maturity comes into place. So maturity is also one of the big topics that will be tested, and how maturity shall be applied. Okay, when to be applied. How do we actually use maturity in our audit? Okay, now in the exam question, sometimes they do actually shed some information on maturity. So we have to be very clear on what do you mean by maturity? All right. So when the question asks you to identify, you must able to understand what the question wants. So we are going to share with you the types of maturity, and we're going to show you some example of the matrix guide. And then from planning and maturity, we're going to move on to the next activity, which is risk assessment. In risk assessment pertaining to audit processes, we focus a lot on the risk of material misstatement. But I thought that this activity is also important for us to have a good understanding on exactly what is called misstatements and where is the risk of material misstatement actually comes from. All right, so we need to show you some of the example. And I think all of you are also very curious what sort of risk of material misstatement question will be tested, how usually be tested. So today I actually would like to share with you some of those examples. We didn't have much time because today our session only have 2 hours, but I thought that I would like to use this platform to introduce to you how the question looks like and usually what sort of material misstatement will be tested. I know that there's a lot of SFRS that we need to read, but I think we need to draw some focus on which are the popular SFRS that we need to focus on. Okay, this is probably a professional level paper, and the examiner assumes that all the candidates sitting for this ASR exam are very proficient, familiar with all the financial reporting standards. So sometimes they may actually share with you some of the case studies and ask you where is the risk and what is the risk of material misstatement. Yes, it will come without warning. So that's the usual the examination questions. Then after that, we will move on to audit evidence. All right, audit evidence actually is a topic that is strongly and closely related to risk of material misstatement because this is the activity whereby we expect the student evaluate the case study and suggesting how we should respond to it. So there are times, sometimes in the question, there are times that they actually relate the audit procedures to certain audit assertions. So I would like to begin audit activity 3 by explaining the audit assertions and how the audit procedures should be prescribed and is appropriate to obtain certain audit evidence that could achieve the audit assertions. All right. So we will also quickly will understand what is the meaning of sufficient and appropriate audit evidence. I think this is important. In exam questions, the examiners they like to ask questions about sufficient and appropriate audit evidence. And then they will also ask about how you should obtain this. So obviously, sufficient and appropriate evidence can be obtained with appropriate audit procedures. All right, so these are some of the very common questions. In activity 4, we want to highlight audit procedures. So over here, we would like to also share with you what type of how we should write the audit procedures. I know that many of you have working experience in the accounting firm, but as for exam purposes, the audit procedures that is the how you should phrase the audit procedures. There is a specific format that the examiners like. So we actually read some of those suggested solution that is offered by ASR, and we notice that they want the audit procedures to be written in a certain format. So in activity 4, I would like to share with you how you should write audit procedures in exams. All right. So because the case studies in the exam is it has already been curated and designed so that they only expect certain way to respond. All right, they may ask questions about audit procedures, and they expect the audit procedures to be precise and able to help the auditors to obtain sufficient and appropriate audit evidence. So we want to ensure that we write the audit procedures as per how the exam requires us to do so. All right. So today we will share some of those samples for you to see. All right. So it also means that in the future, when we have any class practice or when we run any exams, we will also expect you to write the audit procedures as per the sample that we are about to show. Okay, we are going to dive into planning and maturity. So this is the roadmap that I want to show you. So wait, let me just open my annotate bar. Yes, my annotate bar is here. So you can see my red buzzer. Wait, let me make the page bigger a bit. Yeah. Yeah. All right. So you can see that on the left-hand side, I'm using the buzzer to circle it. All right. So the process actually begins from left to right. So it goes from left to right from here. So during our planning, usually the auditor would collect or we call it gather data to generate an understanding of the entity. So understanding of the entity is important. Say, for example, like what sort of products they sell, what sort of principal activities, where are all the businesses? Is it all the local or is it overseas? Where is the concentration of their balances? All right. So they would like to generate an understanding of the entity. And based on the understanding of the entity, the auditor are expected to assess the risk. So over here, the risks are referring to the risk of material misstatement. All right. During the data gathering on understanding the entity, it's also very common that the auditor sometimes do gather data about their accounting processes. So how they actually process their data, how do they generate their invoices, is their accounting processes automated, uh, um, what sort of internal controls they practice, So sometimes we do actually obtain their operating manuals. Sometimes we also obtain the flow charts of some of these processes. So based on that, we will actually assess the risk of material misstatement, where is the area, and then they will actually, auditors will actually suggest some of the procedures for them to understand a bit more and also assess the risk to see whether that particular area that they want to assess is high risk or low risk. So one of the ways that we want to assess the risk is test of controls. So if there is any internal controls that has been identified, we can actually do some tests of controls to understand whether the internal controls that is placed is working effectively or not. During the risk assessment, all right, like say for example, like their corporate governance, their the way they do their risk management, their monitoring, we will be also able to identify if there's any deficiency. Generally, during this very early stage, during audit planning, the results of the test of controls and their risk assessment, the auditors during this audit planning must able to have an understanding whether are they satisfied or are they not satisfied with the test of controls and also their risk assessment. If they deem that this is high risk, it means the test of controls are unsatisfactory. Poor internal controls reports should be prepared and escalated to the management. This management here refers to the senior management of the client. All right. But if it's satisfactory, the audit procedures that they will perform during their audit testing after the year end will be usually restricted substantive procedures. All right. But if there is a lot of deficiencies and the test of controls are also unsatisfactory, then you can see that this is considered as a high audit risk, and then the full substantive procedures will be applied. So over here, I actually use a red box here, risk of material misstatements, to tell you that we actually identify risk of material misstatement during our planning and also during our substantive procedures. Yeah. In our ASR exam, it's very common that they ask these questions, like, oh, they give you a case study. It could be audit planning, it could be during the substantive audit testing. and then they say that, oh, they discovered this. Sometimes the question is very plain. They just say that, oh, this is our observation. And they expect you to identify the material misstatements. Where is the high audit risk? All right. But sometimes the questions are a little bit straightforward. They already identify for you. And then they will ask you, oh, what should we do now? All right. So it really depends on your luck. Whether the examiner wants to give you a tough case study, or they want to give you a simple case study where they have already identified the material misstatements and they immediately dive in and ask you what is the audit procedures. Usually during audit planning, your audit planning memorandum should have a report that also shows what is the audit procedures that we will do in our audit testing. Okay, I know that many firms, they actually have e-audit, and this e-audit, not only they generate their e-audit audit working papers, e-audit also comes with a library with full spec of library full of audit procedures. So during your audit planning, you actually input into your audit system, and then the audit system will generate the audit procedures. So I know that maybe some of you actually have this kind of working experience. But in exam, the examiner actually expects you to write the audit procedures, all right, in response to the case studies. And I thought that this is a good time for me to set some expectation for this exam, all right? I know that in your working experience, writing audit procedures may not actually part of the normal work that you do, maybe, because in many accounting firms, they actually has a system to generate the audit procedures based on your risk assessment in when you key in into the system. The system will automatically generate for you. But in exam, this is actually not given, right? And it's not a multiple choice question. So that is why you're expected to write the audit procedures. Most of the time in a case study, there is only one correct answer because the case study is actually written specific for this. All right, we have one question. All right, it says that the risk of material misstatement will come in during planning phase, test of controls, during audit finals, especially on the audit of account balances. So for exam purposes, so I'm going to answer this question based on what we should expect in the exam. For exam purposes, we are expected to identify material misstatement starting from planning all the way till we sign off. Yes. All right. So that will probably include all what you have said. All right. So I hope I answer your question. But I'm answering this based on what is being expected to do in the exam. All right. I hope I answer your question. In exam questions, sometimes the exam question could be very tricky. They only give you the case study that is just looking on audit planning only. So they will actually specify in the first paragraph of the case study, say, oh, we are doing audit planning, all right? Sometimes the question didn't say anything. And you probably guess that, yeah, maybe it's audit procedures, all right? But all in all, the examiner wants you to identify the risk of material misstatement, all right? If we connect this to your work, material misstatements, if this is the areas whereby later the audit procedures will tell you that, hey, this is the amount that need to be adjusted. So this is the list of all the audit adjustment that you are going to propose. But they all come from here. During the test of controls, they may also test. They say that, oh, you do the test of controls and then you discover this, all right? So that highlight to you that this could be the area of the material misstatements that will take place. So in the exam, the risk of material misstatements, the work that need to be done is actually throughout the whole audit, starting from planning all the way until you sign off. And later we will talk about materiality, all right? So I haven't come to materiality yet, but generally the risk assessment is continuous, all right? You can see that after the audit procedures, This area is what we call the audit finalization. During this audit finalization stage, this is where we will collect all the material misstatements that is needed for audit adjustment. So we will collect it, and then we will present it to the senior management. Now, for whatever reason, if the senior management do not agree to correct it, so this is considered as uncorrected material misstatements that has an impact on our audit opinion, then we will actually escalate to the those charged with governance. All right. And then at the end, report to the members. This report to members from our audit side is called our audit report. Okay. Audit report is covered in the different chapters. All right. So when we do our audit, we focus on those areas that is high risk. Okay. And we will also set a threshold to determine what sort of errors, what sort of misstatements that will have an impact on our audit opinion at the end. All right. This threshold is actually called materiality. All right. Because materiality actually affects our audit. It affects the way we decide on audit procedures, where we should audit, what we should audit, what are the audit procedures, what are the areas that we want to audit. So all this is coming under materiality. All right. So at the very beginning, when we do our audit planning, when we establish our audit strategy, the auditor at the end of audit planning must able to determine what is called a materiality for their audit, for the whole financial statement, because we are presenting an audit opinion for the financial statement, right? So generally, this is a threshold that we are talking about. What is the misstatements that is accepted to us that we allow the auditor to issue a clean audit opinion, right? An unqualified audit opinion. So we must set the threshold. That threshold is called maturity. So the higher is the risk that we assess, say a high audit risk, then the lower is the maturity, because that will increase our ability to detect material misstatements. All right. So most of the time in the question, sometimes maturity is defined by the question, sometimes no. Sometimes the question wants you to define the maturity. All right. Sometimes based on different types of maturity, they will ask you, all right, to identify from the case study. So in the exam, when you read the case study, you need to pay attention what is being expected from the questions, all right, that will be asked. So you have to pay attention to what you read in the case study. You do not want to waste time to read the case study a few times, because it's not effective. Although, yes, I know you're given 3 hours for that 4 questions, but trust me, there are times that the 4 questions, you will find that 3 hours is insufficient. All right. So you need to be very efficient, good in time management during the exam. SSA 320 mentioned that the auditors must apply the maturity. All right. In evaluating the effect of identifying misstatements on the audit and of uncorrected misstatement. The uncorrected misstatement is the one that we present in the proposed audit adjustment. And if these uncorrected misstatements is not agreed by the audit client, these uncorrected misstatements will actually have an impact on our audit opinion. Okay, so when we talk about maturity, all right, the auditors are expected to set this, okay, so that they are able to identify the misstatements during their audit. So from the very beginning, during your audit planning, the auditor are expected to identify the maturity, and they must document it. What maturity? Usually in the audit planning, there is a basis that is used and explain how they actually arrive at this maturity. So maturity for the financial statement as a whole, it means that this is the total maturity that is the threshold, all right, for us to issue a clean audit opinion. But then for us to arrive at the maturity for the financial statement, we also set a smaller maturity at a particular balances. So the balances that you can find in the statement of financial position, the amount of the classes of transactions that you can find in the statement of financial performance, like income statement, and also some of the disclosure item, we can actually set different maturity for that based on the risk assessment that we have completed during audit planning. We can. So it depends on where is the high risk. Say, for example, you find that the property plant equipment is very high risk for this particular balance. Then you may want to set a lower maturity level for property plant and equipment because you expect material misstatements to actually happen there. And then at that stage, when you set for the particular balances and all this, you probably have basis and data to support. And then all this during the audit, all right, each of the auditors that is auditing these balances and class of transactions, they will report those material misstatement based on the maturity that you set. All right. Now, at a smaller level, when we do our sampling and all this, then there's another maturity level called performance maturity. So we need to tell the auditor that, hey, when you are doing this checking, if the differences is this amount, please report. That's called performance maturity. Okay. And although, yes, I did mention that we set the maturity during audit planning, but sometimes during the audit processes, during the substantive audit testing, when they discover new information, it may actually suggest to the auditor that they need to revise the maturity. All right, they could. All right, so just because we have set the maturity during audit planning, it doesn't mean that it doesn't change. So it really depends on our discovery. It really depends on the results of our testing, and it also depends on how we actually assess the control environment of the audit clients. That actually can give us a lot of indicators. So once the maturity is set, we can actually continuously revise and review whether there is a need for us to adjust the maturity. Maturity assessment help us in the end. During the audit planning, we will decide like what are the areas that we want to examine, how many items, like how many samples we should select, how many audit procedures we should do, in terms of audit procedures, what type of audit procedures. So maturity assessment is important. It actually gives us the range that we need to work during our substantive testing. It will also go to the extent of suggesting what sort of sampling techniques we should apply, how many sampling we should do, all right? And what is the comfort level that we can issue unmodified audit opinion. So we must actually set this so-called maximum threshold. This maximum threshold is called maturity. So what level of misstatement is likely to lead to a modified audit opinion? So maturity assessment is actually important during our audit. During our audit, we actually are expected to issue a reasonable assurance, and we need to do sufficient work to help us to assess the risk. And based on the information we gathered, we need to conclude and form an opinion. All right. During audit, all right, we also must understand that maturity is applied throughout the whole audit, but we usually begin during our audit planning to identify, to assess the risk of material misstatement first. And then we will do test of controls. And then after test of controls, we also do substantive tests, which during that time, we also have the opportunity to assess the risk of material misstatement because we actually are doing audit testing. And during audit planning, when we have identified the risk of material misstatement, we will also decide the nature, timing, and extent of the further audit procedures. All right. So nature is like, say, for example, what sort of assertions, how you should conduct the audit procedures. Extent is like the sampling, or do we do 100%, when do we want to do this audit procedures, or do we do random sampling? So all these are determined by our assessment of the material misstatement. In the end, during our audit finalization, we will actually have a list of all these audit adjustments. In the exam, is actually referred to as uncorrected misstatement. Uncorrected misstatement, if it exceeded our materiality threshold, all right, it has an impact on our overall audit opinion of the financial statement. In the exam, usually this is the 3 parts, but in the exam, sometimes materiality, all right, the questions could be quite tricky. They do actually sometimes talk about quantitatively material. It could be also qualitatively material. So qualitative, it means that there are some of these misstatements and all this, it is material not because of the value, not because of the amount, it's because of its nature. All right. So later we will show you some of the example of different misstatements. Okay. But generally, in the context of maturity, misstatements are referred to all those like omissions or the amount that is different from what the auditor believed to be, so that's the differences. And this amount is material. So some of them are individually, some of them are aggregate, all right? But generally, if this aggregate and it exceeded the overall maturity that we set, then this actually has an influence or has an impact on how we should form an overall audit opinion on the financial statement as a whole. But for each classes of a transaction, say like revenue, it could be account balances like property, plant, and equipment, and some certain disclosure like related party disclosure. Then we can set a separate performance maturity then. So the performance maturity need not be the same for all account balances. It really depends on the results of your risk assessment. It really depends, all right? And based on the performance maturities that is set, all these misstatements will be escalated and will be totaled as the uncorrected material misstatement for the whole financial statement. Tolerable misstatement. So this is during our audit planning, audit sampling. So during the audit sampling, we need to give a directive to the auditor, like based on the audit sampling that you have, if there is differences, how big is the differences that requires you to include as a material misstatement. So we also set this tolerable misstatement during our work, during our audit processes. So in this performance maturity, it actually is the amount that is set. And usually the amount is less than the maturity we set on the overall for the financial statement. And usually later we will aggregate all these uncorrected misstatements together with all the others undetected misstatements. And we want to see whether the total exceed the maturity that we set as the level for the financial statement as a whole. All right. In maturity metrics guide, we do actually have guides or that we set where we will say that, oh, this is considered as material. Okay. In the exam question, when they ask about qualitative material, they are actually referring that nature. All right. Quantitative materiality is referring to the value. So it is a material because of its value. You also want to consider how it has an impact on the whole financial statement. All right. That is called how pervasive and how this material misstatement has an impact on all the other balances. All right. And all other matters like going concern. All right. So that is also another way for you to see maturity. But in the exam, the common question they ask are usually quantitative materiality. All right. I think one of the years they actually ask about qualitative maturity. So later we'll show you some examples. All right. We'll show you some examples. But more importantly is we need to assess how it would actually impact on our final audit report to the members of the reporting entity. So this is an example of guidance of maturity that is, you can see like 5%, 1%. This is by value. All right. So they set by value. Some of them, the threshold is all, meaning that issue related to director. So it is because 100% means that by nature, all these issues are considered material. That's why we set as 100%. So it means that all the issues related to directors has an impact on the integrity of the management and also the board of directors. So it could be very pervasive and it has a significant impact on the overall of the financial statement. That is why we set as 100. So this is actually taken from the textbook. I just want to show you some example. All right. Now in the exam, usually in the question, they will actually give you some indicators. And if they want you to apply materiality, the question will actually suggest that. All right. So be mindful when you read the case study, because in ASR, the case study that is given, the case study can be quite long. All right. So your ability to read quickly, but at the same time, very effectively, so that you are able to observe what are the areas that will be tested in the questions are important. All right. Now, in our audit planning, during our overall audit strategy setting, all right, you must understand that when we do our risk assessment, we actually do risk assessment by breaking up the financial statement into classes of transactions, account balances, and disclosure, and all this. All right. So when we do our risk assessment, we must able to understand what is the threshold of errors and misstatements that is auditors willing to accept. All right. And all this, how are we going to accumulate? So that is why a lot of professional judgment are actually applied here. So at the end of audit planning, the auditor are expected to determine the performance maturity for the balances so that they are able to design and prepare the audit procedures to further examine those identified material misstatement area. That is why I say that assessing the risk assessment on the material misstatement, it continues with the audit procedures that we have already decided. Okay. So in audit planning, just to summarize, you must understand that this is the area that we do a lot of data gathering. All right. And then where is our audit risk? So I just want to share with you so that you are able to apply to the case study. Some of those areas, some of the balances or class of transactions, naturally they have higher risk. Just give you an example. Say, for example, like intangible assets. So if you compare intangible assets and property, plant, and equipment, because of its nature, intangible assets usually has a higher inherent risk. It's difficult for us to audit intangible assets because first thing first, the physical form is not accessible. Number two, a lot of this identification depends on the documents. All right. So, and we are not able, it's quite difficult for us to also verify or confirm its existence. That is why it has a higher inherent risk. Another part that a higher inherent risk is like, say, for example, like they have a substantial amount of cash in hand, say. So naturally, cash is a higher, also carry a higher inherent risk. All right, there's we probably need to prescribe audit procedure to count the cash. All right, because it's hard for us to confirm the amount. The only way is for us to count because of its inherent risk. All right, high audit risk can also come from poor internal controls. That over here, that is the control risk. All right. Sometimes in the audit manual, the processes manual, they actually identify that they place internal controls here, which is very good, right? But we need to actually test to see whether the control works or not. And if the controls doesn't work, say poor internal controls, then two things will happen. Number one, we need to report to the senior management that, hey, you know, you got poor internal control. Number two, it means that, oh, there could be a lot of material misstatement. Let me go and find out how much is the material misstatement. So for me to cast a net, to able to fish out all the material misstatement, the size of my net must be very small, which is the size of our maturity threshold. So I just trying to connect that. Audit risk also depends on the detection risk, meaning that whether the auditor has the ability to detect this or not. Okay, there are sometimes some of the processes actually does not help the auditors to detect this material misstatements, especially when some of our audit procedures are not very effective to help us to detect this. So there is a lot of professional judgment applied, or maybe we also need to place reliance on third party, all right, to help us to achieve this. So because of that, our ability to detect material misstatement could be low, all right? So because of that, the audit risk may actually come from any of these three parts, one or in any combination. In assessment risk, during our audit, we also sometimes prescribe analytical procedures. We do that, okay? And at the end, we set a maturity level. And then based on our preliminary risk assessment, we will first do the test of controls just to see how the so-called internal controls that's supposed to be placed there, is it properly working? And then based on that, auditors are supposed to respond to this audit assessment. Okay, the test of controls is an important step during audit planning to give the auditor an understanding that whether the internal controls are working or not. Okay, and if the internal controls are not working, it also suggests that there is high chances, all right, that could be material misstatement that could be happening there. Okay, so based on that, to respond, auditors shall design and perform further audit procedures. Now, how many you need to do and all this, it really depends on the risk assessment, all right, completed during audit planning. Then you will design the audit work programs. Now, in the exam, they expect these audit procedures to be done manually. So they will ask you, what is the audit procedures? All right. Revision of maturity it is expected during the whole audit progresses. So it is quite common, all right, that during the later part of the audit, due to some discovery, we do actually reduce our maturity threshold. We do. Say, for example, like you discover a fraud, or suddenly you discover that there is actually some poor internal controls, you know, and maybe some of your audit sampling, you discover that some of these processes is not properly performed. So that will actually draw your focus that there could be a likelihood more material misstatements in some of those areas that you have not seen, or maybe in some of those areas that you think that you have not done sufficient work. So your performance maturity could be reduced, all right, in response to this discovery. Okay, so the nature, timing, extent of the further audit procedures remains appropriate. All right, you can consider doing more audit procedures, or maybe doing more audit sampling. It could be also the timing. You may want to do another round, maybe at a later time, say for example, like subsequent events. All right. So from audit maturity, now we are going to connect to the next section, which is called the risk of material misstatement. Now, in exam question, this is a very popular question. And sometimes in exam, there could be like 2 case studies. Yeah. And they, in this final stage of audit professional exam, most of the questions, they want to test how you apply and how you respond. Very common. The question have this kind of pattern. So they no longer ask questions that test your understanding. They don't test your remembrance. They don't test about theory. they expect you to apply what you know into the case study. So most of the time, there could be question that begins with identifying risk of material misstatement. Then they follow with question to ask you what is the audit procedures. And then they may actually end that question by asking what is the appropriate audit opinion. All right, these are some of the very popular questions. All right, in audit risk, all right, for us, our focus is our ability to detect material misstatement. Okay, and we must understand that there is a chance there could be a risk that we are not able to detect some of these material misstatement. Okay, so that is why during the audit, the auditor need to evaluate the transactions, the balances, all right, using audit procedures so that they are able to discover whether there is any material misstatement. If they have, they are expected to accumulate it, all right? So sometimes in our audit team, we actually assign the work to of different class of transactions and balances to different smaller audit teams. So these smaller audit teams are supposed to do the work, and then they will report any of these material misstatements to the senior management. So usually in the exam, all right, it is understood that it's uncorrected because in the exam question, they will tell you that you discovered this, all right. Then it's assumed as uncorrected, and then they want to see whether the candidate are able to understand how to respond to this. Okay. In our practice, we usually accumulate and then we will share with the senior management and propose this as an audit adjustment, usually. For us in audit risk, all right, our audit risk is directly related to the risk of material misstatement. Okay. It will be great if we are able to identify it, but there could be also a chance that we didn't manage to identify it. Okay. So as much as possible, we try to use the best possible way to identify it. The way for us to identify material misstatements is to apply the appropriate audit procedures. All right. So that we are able to obtain sufficient and appropriate audit evidence to confirm whether there is any material misstatement or not. So there is a lot of professional judgment that applies here so that we are able to put sufficient audit considerations in the whole financial statement. The auditor shall identify the risk of material misstatement and determine whether they exist or not. So we begin by the smaller unit, which is the class of transactions, account balances, and disclosure. And then we accumulate all the way, which is called the aggregated, all the way to financial statement. What is a risk of misstatement? Usually, it could come from a few things. It could be difference between the amount. That's one. Number two, it could be also omission. Okay, it could be also errors. Okay, it could be also fraud. It could be also some of the disclosure, the narrative and all this that is not accurate. Some of the item that's supposed to be disclosed but not disclosed. All this accumulated under one thing called misstatement. For us, we focus on those that is material, all right? So those misstatements that is not corrected, this is the one that we need to accumulate and show to the audit client because the audit client at the moment, the draft financial statement is not adjusted with this uncorrected misstatement, okay? Risk of material misstatement is the risk that financial statements are materially misstatement prior to audit. So at the very beginning, where we identify all this, so this is the risk where the material misstatement that may happen. Then we need to identify during our audit procedure, what is the amount, all right? We need to identify that. So we need to find that. So two big factors that will affect how we set a limit on the risk of material misstatements is the inherent risk and the control risk. Now, let's talk about where the misstatement come from and how these are actually tested in the exam. Okay, in the exam, very commonly, they will talk about the amounts, but the amount, it could be any amounts in the statement of financial position. It could be amount in the income statement. what is commonly tested. All right, so I just give you some hints. Intangible assets is quite popular. Classes of transactions in income statement, revenue is popular. Inventory is also tested before. They also test on payables. All right, omission of liabilities is a very popular question. They also test on that. So when they test you on this, your proficiency on the financial reporting standards is important, because they want to show you the case study. They ask you what's wrong with this. They will ask you, and then you must able to say that, oh, this is wrong. This is how you correct it. This is the audit procedure we must do. They want you to respond like this in the exam. All right. The misstatements also, of course, like I said before, it could also include disclosure. All right. Sometimes when you look at some of those misstatements carefully, all right, in audit, the misstatement could be having this kind of root causes. It could be because of inaccurate data gathering, the processing data. Sometimes it could be input error. Okay. It could be the whole amount is actually not presented, maybe because it's not separated. It could be also the whole amount is not disclosed. Sometimes the accounting estimate that they use, all right, is supported with incorrect inputs, misinterpretation of facts. It could be also the assumption they use, it could be also not reasonable. Management is very biased when they do accounting estimates. Sometimes it could be due to what we call as threats, you know. So in ethics, we call this as threats because the management they are not they do not practice integrity. They do not practice independence when they are looking at accounting estimates. They don't actually review their work. All right. They do not get an expert to comes in, you know. And even when they get the expert to come in, do they actually review the work of the experts, you know? So these are some of those areas that the auditor will want to check. So this is actually a big area that we usually focus on in exam. Okay, sometimes it could be application of accounting policy. So in the past year questions, we did have questions to test on this. They say that this is the accounting policy, but the data in the case study was showing otherwise. Okay, it could be also wrong classification, asset that is classified in the wrong types, you know. So this is also some of those common areas. So yes, we do sometimes involve calculation. There are some questions that also requires you to do some calculation. So you need to prepare well for this exam. Omission of disclosure is also one type of misstatement. So for fraud risk purposes, we actually expect the auditor to continuously maintain the professional skepticism throughout the audit. If they have a material misstatement that suggests fraud, the auditors are expected to report. I think reporting fraud has been covered in the last webinar. This is some of the popular risk of material misstatement. You can see that I'm showing you two here. All right, so this is the popular ones. So I extracted this chart from the PMP report 2023. This give you some ideas, like if the exam question will be testing on risk of material misstatement, the examiner may actually select the topic or the transactions type or the balances in balance sheet from the queue here. You can see that in the past, these are some of the top inspection findings. Accounting estimate is one of them. Group audits. That is why you can see for ASR exam, group audits are also a popular question. And our last sitting, which is December 2023, group audits was actually tested. Completeness of liabilities. So this is one of the new findings for 2023, how we classify investment and also going concern. though not listed company, you can see also has a lot of similarities also. Accounting estimates and also group audits. All right. So these are some of the reminders that ACRA has presented. So what I suggest is that I will come back to this on where is the focus area, because this is suggesting what are the things that maybe selected for exam. I do not know, because the tips for exam has not been announced. We would like to do a class exercise, right? So I'm going to share a link first. Wait, I'm going to share a link first. I have just pasted a link. Can you please click and join? And you join this class exercise, you're able to see this. All right. So once you click this link, it will bring you to this form. All right. This Google form has altogether 5 questions. I just want to share some of these very short questions. All right. To give you an idea, like how the question will be tested in the exam. I'll give you an idea, like, how they actually, where are the focus area, what are how the question can be tricky, so just share with you. Is 5:30 now, maybe I will give you, say, 5 minutes to complete this set, and then we will debrief this. After debrief, we'll come back to this ACRA page, all right, where we will talk about what are the key reminders that you set out in the recent report, and hopefully these are some of those that has been the focus of our examiners. So let's take about 5 minutes. But I really do not want.
Recording stopped.
So, okay, I give you 10 minutes, all right? So we will come back to this at 5:40, all right? I do not want you to rush. Now, for those of you who have already submitted and you think you want to change your answer, you can just do it again. I mean, all right? After this class, we will share this link in our Google Classroom. Then you can do this class exercise again, all right? No problem. All right, welcome back. For those of you who have submitted your Google form, thank you so much for participating. So this is the results.
Recording in progress.
Let me just share the results with you. Let me open the response page. Wait, let me just put this aside. So we received 63 response. So of the overall, our class performed at 73%. Yeah, we do have people actually getting 12 of you actually get 100%. Thank you so much. It's really showing good progress. Okay, let's debrief each question. So it's okay you get the question wrong over here, all right? So this question is just to help us to learn. It's part of our journey, all right? At the same time, I thought that we will discuss some past year questions at the later stage, but I just want to share with you like how the risk of material misstatement will be tested in exam. So I just want to showcase a bit. This question is actually adapted from a past year question, but anyway, let me just read to you. So while we know that risk of material misstatement will be tested, but we do not know in the actual exam which part of the balance sheet or which part of the income statement they will test. We do not know. All right, so that one remains as a wild guess. So what we do is usually the ASR tips actually do give us some indicative, but at the moment it has not been issued. And we also noticed that the ASR tips is very, very close to what ACRA emphasized on in their inspection findings. We also noticed that. This question is adapted from one past year question. I extracted part of it. And the areas that they tested is actually leases. But it's a very small area of lease that they test. It's called sales and leaseback. All right, let me read the question. On 30th November 2023, NT entered into a transaction with Man Leasing to sell its head office building to ML and lease the head office building back for 30 years. Okay. From the first sentence, it sounds like sales and leaseback, but we need to we have to examine further. NT in this relationship is the seller, which is the lessee, and ML is the buyer and the lessor. Ownership remains with NT, and it will only be transferred to ML if the seller, which is NT, defaults in payment. Okay. Seller lessee, which is NT, remains responsible for the repair, maintenance, insurance, and property tax. Seller lessee retains the right to use the building, and the seller need not request permission from buyer to carry out building improvements. All right. Seller lessee NT recognize right of use asset, lease liability, and a gain or profit on disposal in that sale of the building. That is why NT has treated this lease transaction as sales and leaseback. So the question is that is this accounting treatment correct or incorrect? Okay, you can see that in our class is half-half. So if you look at the first sentence only, it looks like a sales and leaseback. But there are some clue in the whole case study. All right. You can see that number one, there's nothing changed. The seller used the asset as usual. There is no transfer of ownership. All right. It only needs to be transferred if they default in payment. Okay. So at the same time, if you take a look at this, it means that the lessee, all right, can actually do the building improvement. So they treat it like his own asset. So it looks like the asset has never changed hands. So I doubt that there's any sale in the first place. Okay, I doubt that if there is any sale in the first place. And because of that, based on just the case study that we have here, it looks more like the risks and rewards of that asset has never been changed hands. It has never been transferred. It looks more like a financing where the building is actually used as a collateral. It looks more like it. But this question is tough because of the limited information offered in the case study. And the question actually need you to decide whether it is sales and leaseback transaction or not. In this question, the answer is that this is not a sales and leaseback. This is it looks more like a loan with the collateral, all right? And you need to support your argument, all right, with the facts that you can find in the case study. You need to, all right? So usually this is a question where they ask you to evaluate, you need to support your decision, okay? So like I said, I'm using this question just to showcase, all right, how the exam question may be asked, all right, in testing risk on material misstatement. Next question. Sometimes, in fact, every year, there will be a question that is tested where they give some data, like data analytics, and then they will ask you to identify 5 or 6 material misstatement. So this question too, let me show you the question. This question too looks something like this. In fact, this is actually taken from a past year. What's wrong with PO 11116, this one? So if you look at this one is very odd. You look at you will expect the purchase order date as the earliest. You expect, because usually if you look at processes, that will be authorized first. Purchase order should be authorized and issued. Then only they will submit the order to the supplier. Then supplier will deliver the goods. Then after that, followed with the invoice. Then the liability will be picked up, usually. But you look at this, the purchase order date is after the delivery. So this actually suggests that maybe this goods received, all right, is actually not authorized by a purchase order. That's why I say purchase orders was issued after goods received. This is a problem, all right? This is a problem. Another one, let's test on question 3, also very similar. So I just want to show you. But this kind of format of testing, data analytics, they also can test other things. Okay, in the last sitting, they test payroll. And it looks like every sitting they test this. Amount of data they test, it varies. Sometimes the data is a lot. There's 1 year, one sitting, there's like 30 lines. Wow, it is very exhausting. It's very tiring. And they also have a lot of columns. So in the past, this type of question, they also have tested fixed asset register also, yeah. But the format is very similar. It's just that they test on different kind of balances. What's wrong with PO 11112? So this one is this one. So you can see that the purchase order is 8th of November, goods received is 22nd December, invoice date is 14/8. The invoice is before goods received. That's weird. And then the reporting entity recorded before receipt. This is odd. All right, so this is the problem. So you can see that for question 3, the payable was recorded before goods received. This is the problem. All right. So when the question highlighted and asks you where is the misstatement, it's actually asking you what's wrong. Then you have to say that this is it. And then sometimes they ask you what could be the root cause. Yeah, they will ask you what could be the problem that resulted this, So that one, their answer could be based on their experience, all right? The answer may not be in the case study. That's why I say that your understanding on internal controls are also important. Next question, all right? We test you on maturity. As the audit manager, you are reviewing the audit working papers. The maturity level is determined at 0.5 million, all right, which is 1% of total asset. Okay, which of the item that is exceeded the maturity level? So this one is simple, okay, because I set on 0.5, the amount that is overstated is 0.6. This one is below 0.25. This one is 0.26. All right, so this is very direct. So this is an example whereby maturity that is set and is identified as material based on individual. All right, this is based on individual. item, all right? And this is a performance maturity that we set for this class, all right? So for this class of transaction, which is revenue, the total is 0.6 as exceeded 0.5. The next question, very similar, but this time around, the question is testing based on aggregation. As the audit engagement manager, you are reviewing the audit working papers. The maturity levels is determined at 0.5, which is 1% of total asset. The audit team identified two misstatements: 0.25 million on other income due to recognizing government grant not yet received as other income. All right. That is why grant receivable 0.25 million before grant conditions are satisfied. Understated of 0.26 of operating expenses due to an error in recording the amount paid to suppliers for expenses incurred as prepayment. So, so you can see that there is an understatement here and overstatement. So if you look at the question, they ask you about the material misstatement. So if you look at the question, all right, so they actually ask you true and false. Which one is considered as material misstatement? But if you look at the question, all right, they didn't suggest much. They didn't suggest much. They ask you about the statement. Material misstatement A and B are not material misstatement because each has not exceeded. But if you are looking at on overall, all right, which is the amount that you will include in your uncorrected misstatement, all right, then you can see that the answers is differentiated by the reason that you give. So when you give an answer in the exam, all right, you have to give the answer as if like you are in the actual audit. And in the case study, they ask you, is this the uncorrected misstatement amount? So under this kind of circumstances, you need to look at the total for the whole class of transactions. You have to take a look at the total. Like in this case, the misstatements of A and B are considered as material misstatement because in total, they actually exceeded, all right? So when we are looking at maturity at financial statement level and all this, we usually aggregate it, we total it, and then we want to see how this will actually have an impact on the financial statement or the opinion. So I just want to use these two questions to show you the differentiation of individual maturity and aggregated maturity that we apply on material misstatement. All right, so that is the difference. But once again, thank you so much. So the link I will share again in the classroom after the class. All right, so if you want to attempt again, we truly welcome you to do so. Let's continue from here. Wait, let me just. All right. So in the recent 2023 report that's issued by ACRA on their inspection findings, these are some of the key areas that they discuss. All right. So I just want to highlight to you, this is the key areas. It could be some of the areas that the examiner will also be looking at. So these are some of the popular ones: group audit. All right. Another area is the audit report. All right. And in their inspection findings, they actually noted that some of these subsidiaries are not consolidated. Okay. And this could be maturity misstated. All right. How about the effects of non-consolidation? So they find that the group auditors has not given sufficient consideration on this. Going concern is also another popular topic. You can see ACRA's top inspection findings also highlighted this. All right. It talks about the work of auditors, all right, in reviewing the going concern. All right. So apparently the auditors are supposed to do work, all right, to obtain sufficient and appropriate audit evidence to support the going concern assumption to be applied in the financial statement. You need to, all right? So this is also one of the areas that ACRA focus a lot. Audit documentation. In the top inspection findings, they also discover that there's a lot of unquoted investment that when they perform fair valuation, the auditors somehow rather did not focus much on auditing the accounting estimates. All right, so this is also some of the areas of focus. They also remind about audit documentation. They say the auditor shall include in the audit documentation. So when we do our risk of material misstatement, all right, the amount below which misstatement would be regarded clearly as trivial. It means that this is not acceptable. All misstatement accumulated during the audit and whether they have been corrected or not. So generally, if there is a misstatement that has been identified, if the audit client has adjusted it, has corrected it, then that is no longer a problem. It's no longer a problem. It is all those that is not corrected. So first, you have to identify the material misstatements, then you highlight to the client for correction. Okay. Then after those that is corrected, then the auditors will only want to look at those that is uncorrected. And in total, they will decide whether these uncorrected misstatements is considered as material individually or in aggregate. So there are some items individually is already material. Say, for example, I just give you an example, all right? This is qualitatively material when, say, during your audit, in your related party disclosure, the audit client did not disclose to you one of the relationship that they have that resulted a lot of related party transaction, say. So because of that, your related party disclosure has a lot of omission because this relationship was not disclosed. And you now doubt the integrity of the management in this kind of perspective. All right. So that individually alone, that item alone, all right, it could be very material and it could be also very pervasive to the financial statement. All right. Because it also shows that the senior management, the tone at the top as to how they have the influence in their financial reporting and the detection risk is actually very high. You're not able to detect this. So that alone individually can be material, okay? Sometimes the audit conclusion could be like the sample question that I show you in the class exercise where it's aggregated. So sometimes audit conclusion, when there is amount, all right, they will actually aggregate it so that they want to see the total, how much is the material misstatement. So you need to also look at the case study carefully. What are the material misstatement that was identified? Those that is like pertaining to the integrity of the management, that related to fraud, then individually it could be very material. Okay, when there is a quantitative, usually we will aggregate it and then we will look at the total. All right. We will now move on to audit evidence. In audit evidence, we would like to cover two areas. These two areas are key in determining how we should proceed in some of those case study. So usually in case study, we will look at a case study, they talk about material misstatements. Sometimes they will proceed to ask you about audit procedures. So before we move on to audit procedures, the audit procedures is to design to collect audit evidence to fulfill these audit assertions. In our audit processes, sometimes it's called audit objectives, all right? So for class of transactions, say for example, like revenue, we collect audit evidence so that we are able to ascertain or achieve like these audit assertions like occurrence. We want to ensure that the transactions events has been properly recorded, disclosed, and it has properly occurred. Okay. Completeness, we have to ensure all has been recorded, okay, all the transactions, no omissions, which includes the disclosure. Accuracy usually is related to amount, also including some of those financial data, all right? Like some of them, even though it's not numbers, it's still considered as financial information because it has an impact on the financial statement. So all this has to be accurate and also properly measured and described. Cutoff is relating to transactions mainly, where the transaction should be recorded in the correct accounting period. Let's not forget that the main accounting principles that we carry in our income statement is accrual basis. So the matching actually matters here. All right. Classification is when the transaction, the events are recorded in the proper accounts, especially it's based on the nature and or maybe how it was used. All right. Classification also sometimes determined by the reporting standards. They will tell you whether it should be expense or it should be capitalized. So the classification also determined by that. Presentation usually determined by the reporting standards. The reporting standard will say how it should be presented and disclosed. So over here, we want to ensure that it is consistent with the financial reporting framework. For balances is some of those balances that you can find in the statement of financial position or balance sheet. So the first one we usually test is assistance. We want to make sure that this is real, asset liabilities, or even equity. Rights and obligations will determine whether, first thing first, the entity should record this or not. So for assets, we will test whether they have the rights, and for liabilities, whether they have the obligations or not. So for the rights, it may come from different reporting standards, depending on the classes of assets. Obligations, it may actually come from SFRS International 9, which is financial liabilities. It could be also coming from SFRS International 1-37 on provisions and liabilities. All right, so it could come from either any of this. For assets and liabilities, we also need to check the completeness to ensure that all the assets and liabilities and equities are recorded. None of them are omitted. The valuation of the amount, so it really depends on the measurement method that being applied. Accuracy is a very popular assertion that is tested. Sometimes they actually ask you to calculate. So be prepared with, when you use your Excel sheets, in the exam, you need to be very familiar how you want to use the Excel sheet to do the calculation. So that when there is a need for you to do calculation, you are able to show it using the formulas that is embedded in the Excel spreadsheet. Classification, also important. It really depends on how the financial reporting standards has determined for you. So we need to classify based on the reporting standards framework. Presentation, also the same for the balances that we have. All right. So usually we will get a copy of the reporting standards and compare to the financial statement presentation and disclosure drafted by the client and see whether their presentation and disclosure is appropriate or not. These are some of the very common audit procedures that we use to obtain audit evidence. But in the actual exam, they don't usually ask general questions. They usually ask you to prescribe to solve a certain problem that is needed for the case study. All right. It could be any of this, inspection of assets. All right. So it could be physical site. It could be vouching, which is inspection of a document. It could be observing a process. All right. It could be inquiry with the management. It could be also discussion. It could be doing confirmation. We can recompute or recalculate, which is usually used for accuracy. We can reperform a certain procedure. Say, for example, test count, so this is to reperform. You can be also reperform accounting estimates, all right, and also analytical procedure. In examination, we do not accept written representation as audit procedure. We don't accept, right? When you write your audit procedures, there is a standard format. I will share it with you. Please be very mindful of the choices of verb that you use. All right. So try to refrain from using verbs like or checking or testing, because these are the verbs that are very general. In the exam, the examiner would not want to guess actually what is the exact audit procedures that you are trying to suggest. So you need to use verbs that is very precise, all right, very precise, so that you are able to describe exactly what is the audit procedures that is needed, right? So over here in this page, I'm just showing you some of the general audit procedures. We will now move on to some audit procedures that is more specific. Okay. In the next webinar, when you join me next week, we will start to look at some very specific audit procedures, testing on specific balances and also some transactions. Audit procedures that is used must be the kind of audit procedures that can help auditors to obtain sufficient and appropriate audit evidence. So although it sounds very general, but in the exam, they expect you to write the audit procedures that can help you to achieve this. All right. By far, the audit procedures is one of the areas that is commonly tested, if you ask me. Risk of material misstatement and audit procedures are very popular question. And you can randomly select any of the past year questions in the last 6 sittings. You will see that there are many marks that are allocated to this. There are some of the sittings, the marks allocated on risk of material misstatements and audit procedure as high as like 40%. So there's a lot of emphasis and a lot of work that need to be placed on this area. When we talk about sufficiency, usually it's the measure of quantity, all right? So the quantity of audit evidence can come from doing more testing using one audit procedures, or you can use multiple audit procedures, all right? So that you can increase the quantity of audit evidence that supports your audit assertions, all right? So it could be coming from that. Appropriateness are those audit procedures that is effective to help the auditor to obtain appropriate audit evidence. That the audit evidence is of the kind of quality that suffice and also make relevance and reliability in supporting the conclusion the audit opinion is based on. So appropriateness is important because it has to be effective. I just give you an example. Okay. Say, for example, this year, the audit client actually purchased a new building. Say, they bought a new building, so they moved from the old office to the new office. Okay. To obtain appropriate audit evidence to support existence, all right, we should do a physical site. It's very appropriate. And there is probably no other audit procedures that are able to give you audit evidence on how the building actually look like. True or not? Right. So that is appropriate. Okay. But we can actually expand on the sufficiency by doing more audit procedures on existence. Say, for example, we can check in the registrar to see whether the building is actually exists in the registrar or not. We can check the title, to see whether that title is indeed shown this parcel, the building, and we can also check the records of the documents that issued on by the government and the regulators on the building's fitness, all right, that is ready for occupancy. We can use this to support. So that will build on the quantity of audit evidence. But in terms of how the building looks like, how do you know? The building actually looks like this, and it confirms with what the design, the structure, and also behind the physical site. That is the most appropriate audit evidence that we can collect. So I just want to show you the differences, right? Because in the exam question, sometimes they ask, but they will not ask question like, oh, which one is appropriate? Give me an appropriate. They always ask you what's the audit procedure and the case study. And then you are supposed to give the audit procedure that is appropriate, full stop. All right. So the answer that is available for you is also very limited, probably one answer. All right. You don't have many choices. All right. Audit procedures, I'm going to show you some example. So these are some of the good practice. Start start with a verb, okay, and then you should indicate audit evidence that you want to obtain, all right. Depending on what audit procedure you're writing, you can also suggest the source of audit evidence, all right. And to complete it, you may want to also cover audit assertions, all right, why you are doing this. So this is one of the example, review the lease agreement signed. So this is the evidence that we want to see. This is the verb, the description of the action. Why we are doing this? To confirm that the warehouse was leased to lessee and thus held for rental income. So we want to test on the rights. All right, so this is one example. Give you something a little bit more complicated. Verb, you select sample. So this is a sampling audit procedure. Sample on what? Sales invoices. So this is your source, all right, sales journals, and then proceed with the next action, which is you vouch, all right, the details, all right, to confirm whether there is delivery or not, to confirm. So you can see that below this part is actually your audit assertion, this part, all right, this part is the audit assertions, all right? So over here, we select samples and then we continue with vouch, all right? So the audit evidence that we want to see is the delivery notes, the sales invoices, all right? So that we are able to confirm that this revenue is indeed has occurred. The third one, this one also select samples. And then here we trace the details of these delivery notes to the customer orders. All right. So over here, the audit evidence we want to collect and obtain is the delivery notes and also the sales invoices and the customer orders. All right. And then this is to ensure deliveries has been recorded as sales revenue, audit assertions. In the exam questions, it's very common that the audit assertion sometimes is suggested in the question itself. They will actually tell you, oh, please propose or suggest one audit procedures to test this. They will tell you sometimes. Sometimes no. Sometimes they will just ask you, how should you respond to this? What audit procedure you will do? Please pay attention also. Sometimes in the exam, they will tell you how many marks will be awarded on. Yes. Audit procedure 1 mark, and then they will also ask you to explain, then another mark. So you need to observe some of these things so that you are able to score most marks during the exam. All right. So I'm sharing with you some of the example here. So this question is actually extracted from PMP. All right. So this is selected from PMP. So I prepared two exercise for you. So we'll do this first. This one is a shorter one. Let me read. Company A is engaged in the business of trading electronic products, parts, and accessory. Company A has two subsidiaries, S1 and S2. S1 in Singapore, S2 in Malaysia. A and S1 are audited by public accountant in Singapore. S2 is audited by an audit firm in Malaysia. A has a cost of investment in S1 amounted to 2.9 million, and S1 has external debt amounting to 800,000 as at 31st December 2017. S1 incurred net losses during the financial year and was in net liabilities position as at 31st December 2017. What are the audit procedures are appropriate to test the valuation of the amount due from S1 800,000? So this question is related to this. So in exam, it's very common that the case study is long, but they only need to test 1 or 2. So you can see that I've given you 5. Let me read. Perform debtors confirmation. So we want to test the amount, 800,000, accuracy. Number 2, review the sufficiency and appropriateness of the provision for credit losses for this debt. Review the ability of S1 to repay the debt and reassess the provision for credit losses. Okay. Number 4, recompute the debt balance. Number 5, vouch to supporting documents for the material new loans extended and repayments during the year. So it means that this one you check the movement. Now, if you look at the audit procedures that I give here, all right, if you can select more than one, what will be your answer? So while I need some time to prepare the next class exercise, so in the chat box, maybe you can suggest to me, all right, you can key in. So it could be more than one answer here. All right, 1, 2, 3, 4, 5. So I put somewhere like this. All right. Yes, we are auditing the lender. So in this case study, we are auditing. So subsidiary 1, all right. This is amount due from S1. S1 has an external debt amounting to 800,000. So say, for example, you're auditing the books where there is an amount that is due from S1, 800,000, say, all right? Then how do you want to ensure that this 800,000 is accurate? So I'm preparing for the second class exercise that we want to do. All right, so let me just. So all of the audit procedures actually can to confirm the accuracy of 800,000. Debtors confirmation, definitely, if you perform the debtors confirmation, not only you can test the accuracy, you can also test the existence, all right? Yes, you can review the appropriateness of provision for credit losses. You can test their ability, and then you reassess, yes. Recompute, definitely, and then you can vouch to the source documents on the movements of the loans extended and any of the repayments. So all of the above. So I've shown you the next class exercise. And when you click the Google form, you were able to see the header that has a giraffe, all right? It looks something like this. Let me share with you how the form looks like. So I give you 10 minutes to answer, and then we quickly do a debrief, and then we will end the class. So it looks something like this, right? So I've just shown you. So this class exercise actually contain 5 questions. So I'm starting to see responses, all right, that's coming in. So I'll check again 5 minutes later, all right. If everybody has already responded, then we will begin our debrief. So we are starting to see a streaming of responses coming in. Thank you so much. I can see the numbers are increasing. So let's wait for another 2 minutes. Yes, we will be sharing the class activity questions through a link. So the same Google form will be given in the link, all right? So you can try the questions again, and then it's auto mark. I have not set any password. There is no limit, so you can attempt how many times you want. I understand that I have already done the debrief here, all right, because the debrief will be recorded. So if you want to check why you get a wrong answer, then you can actually review the recorded session, all right? But generally, we will do the debrief before we end the class today. Yes, I'm seeing more responses coming in. Thank you so much. So we will share the link in our classroom, all right? In case if you cannot find, you can always send us an email, all right? We can show you. All right, I got 64 responses. I'm very happy. Okay, let's debrief. Let's debrief, okay? And then we want to end the class. Wait, let me just open the page. Just give me a minute. I open the response and the report. All right, you received 64 response. On the overall, we fare at about 54%. Not too bad, I would say. We still have people responding. So let me just debrief, okay? Oh, okay. Let me go through this. Okay. The question is, which of the following is not a material misstatement in auditing? Computation of depreciation expenses performed by the client differs from auditor's computation. Yes, this is a kind of material misstatement. The board of directors unintentionally omitted to disclose the relationship of a sole supplier, which is a control company of a non-executive director. So omission of disclosure, like in this case, is also a kind of material misstatement. All right. Yes, it's material by nature. All right. The director's report did not disclose the shareholdings of the directors accurately. First thing first, when we talk about material misstatement in auditing, in exam, we focus only on financial statements. All right. So director report, this one, we have to KIV first, but this probably is not what the question is asking. Next one, we read first. The office rented to their parties, I think they are related parties, were not classified properly under investment properties. So usually, all right, if you have a building and the building is rented to third parties, all right, for rental income, it should be classified under investment properties. Wrongly classified is still considered as a misstatement, all right? So by these three, I think director's report error here. This is probably not part of our examination material misstatement auditing. So this is the odd one. So this is the most likely answer, all right? But this question could be tricky. During your audit, you noted that X has recorded massive operating losses and cash flow deficit. To increase your ability to detect risk of material misstatement, you may want to consider. So when we talk about massive operating losses, cash flow deficit, this is considered as high audit risk. Okay. There's many things that you can do, but it's limited to the choices that we have here. All right. Reducing audit maturity threshold, increasing audit maturity threshold, issuing a modified opinion, increasing the sampling for all audit procedures. All right. Generally, if you look at this during an audit, the first response, so you can see increasing the sampling could be a correct answer too. If you ask me, it could be a correct answer. But the first response that we would want the examination candidate to choose is to reduce the audit maturity so that you are able to increase your ability to detect risk of material misstatement. All right. So when you lower the maturity threshold, then you are able to increase your ability to detect. So this A answer is a slightly better answer compared to this answer. All right, it's a better answer. So in examination, we need to choose and propose audit procedures, answers that meets the requirements of the case study. During your audit, you noted that the client acquired a new machines. As such, you have tasked your audit assistant to visit the plant to verify the existence of these new additions. The audit procedures would likely fulfill the audit assertions. Over here, the best answer is existence. All right. So if you compare occurrence and existence, because you go and verify the existence and all this, in the question itself, I've already suggested that the very likely answer is existence. Question 4, your audit manager requested you to collect more information on the bond issued to truly understand the substance of the underlying risks. Bonds sometimes carries both debt and equity features. The purpose of this data collection and audit evidence is to ensure the bond is properly. So this one tests you a little bit on your reporting standards. So if you read financial reporting standards, SFRS International, they actually require this kind of financial instruments to be presented separately, debt and equity. So that is why if we need a separation on this, we are actually testing on the classification. All right. So the data collection and all this to ensure the bond separate and all this is properly classified. That is the first thing that we want to achieve. But obviously in subjective questions, sometimes it could be more than one answer. So usually the question is very specific. They will ask you to test only certain things. All right. So over here, the closest answer for this at the moment is classified. All right. The case study actually pinpoint to that. Question 5, your audit manager has raised a request to review X going concern. He or she has directed you to perform new audit procedures to manage this audit risk. Which of the following audit procedures you would do next? So over here, you need to have a little bit of understanding on how we should do going concern review. Usually going concern testing requires to examine whether the reporting entity has the ability to operate for at least the next 12 months after the financial year end. So this is a few audit procedures that is given. Request a written representation. This is not the kind of audit procedures is expected in the exam. So in the exam, usually written as representations are not expected. Sometimes in the exam, they actually tell you that please don't give me a written representation because I do not want. They will tell you that. So this answer is not accepted. Continue to monitor cash flows, maybe. obtain cash flow forecast for the next 12 months at least and reviews its ability. So this one is probably could meet our going concern review. Advise the board of directors that a modified opinion may be issued. We are asking for audit procedures. So the answer D is not quite appropriate. All right, so that is why that leaves us to the answer for C. That is to obtain the cash flow forecast and then we review its ability. So this is just an example of question to check your understanding is one thing. All right, and hopefully you are able to go back to review some of the lecture notes that I've given you. And we would like to end the class now. If you have any question, you can post your question in the chat. Otherwise, you can actually leave the meeting. Together with Laksha, I would like to extend a very big thank you for joining our class today. And I will see you next week. Thank you.